Hello everyone, welcome to our discussion sessions on official mock exam issued by ACCA for advanced taxation exam for December 2025 exam attempt. In our today's class, we will be having discussion on question number 1 of this mock exam paper. Discussion of complete exam papers just before your examination is a great value addition for your preparation because it gives you an idea that how you have to deal with all of the topics together in your exam situation. It also gives you an idea about the important time management skill. During this discussion session, we'll be obviously covering this exam paper and we'll obviously be using my life-saving summary notes in which I have summarized the entire course of advanced taxation in just 57 pages. All the relevant rules are written in it. We will be using it throughout our discussion. And obviously, it's very important because, like, for example, you need to refer any topic, like you want to refer individual losses. You'll just write individual losses in find function and you arrive at that topic. So it will give you a very good revision while we use the summary notes. We use this past paper discussion session for your topical revision also. So in my regular course, obviously I've covered around 7 complete attempt exam papers, which give my students a very good idea that how they have to improve their preparation in the last few days. And then there are 3 mock exams which I give to them for their self attempt, on which I provide them with the assessment and the feedback. And this is the reason why more than 70 of my students have secured nationwide positions in the examinations which I teach: advanced taxation, advanced audit and assurance, and SVL course of ACCA. Most of you guys already know me. If anyone don't know me, I'm Owais Mirchawala, top faculty and director at Mirchawala Hub of Accountancy for this advanced taxation course. Okay, so now let's deep dive into this question. I want you all to listen to me very carefully. It will be a very detailed session because it's a question number 150 marks question. We'll read the entire question, we'll discuss the points which we have to include in our answers, and then at last we'll be actually drafting, like typing the entire answer in the today's class, so that you can understand that what length of point you have to write, what comments you have to develop, how you have to start an answer, because that's a major hurdle which students face, how you have to approach a question in the examination. So all of these things will be covered in our today's class. The important thing is your patience and concentration throughout this session. So let's deep dive into it. You should assume that today's date is 3rd of December 2025. You are an ACCA student working for a firm of accountants. Your manager has asked you to carry out some work in relation to a group of companies owned by your client, Alan, as well as some of the Alan's personal tax affairs. In addition to some ethical considerations which have been raised by your manager, advice is required in respect of. See, this is the introduction screen of the question. So normally you will not find a lot of relevant information here. The examiner is just introducing you and guiding you that what he will be asking in this question: a chargeable gain and availability of rollover relief among a group of companies. So apparently it's capital gains group because rollover relief in group of companies is a matter of capital gains group. Capital allowances on purchase of a building, income tax and NIC implications of a redundancy package, and tax implications of furnished holiday accommodation. The following exhibits available on the left-hand side of the screen provide information relevant to the question, which we will be reading obviously. Exhibit 1 is Allen Group of Companies, memorandum from the manager. Exhibit 2 is Personal Tax Affairs, schedule of information from Allen's client files. And Exhibit 3 is work to be carried out, which you can say as the requirement tab. Okay. This information should be used to answer the question requirements within your chosen response options. You have 2 response options available. One is word processor, in which you will be actually drafting the entire answer point. And then there is a spreadsheet on which you do the calculation part. Okay, so let's deep dive into the exhibits and then look at the relevant requirements. Okay, now see, when you're reading the question for the first time, it's very important for your examination also that you read with patience. Don't rush to any conclusion that the question is difficult or easy. Always read with patience. Every question is easy. It's all about how you approach it, how much carefully you look at the issues. Alan's business interest. Alan has never been a sole trader. He has owned the shares in various UK trading companies for many years, as shown below. See, Alan is an individual. Alan himself is not a company. Alan himself is an individual. He owns 100% shares in River Limited and 80% share in Bridge Limited. Okay, first of all, remember that River and Bridge Limited are separate. They are not part of a single group because the parent is an individual. If parent is an individual, a group cannot be formed between these two companies. However, Bridge can form a group with Water and River can form group with its companies. But River and Bridge cannot be connected with between them. Why? Because the common person between them is an individual. Now, River Limited owns 85% shares in Henderson Limited and 60% shares in Cares Limited. For capital gains group and for 75% group both, it is mandatory that direct ownership should be 75%. Here the direct ownership is 60%. Cares Limited owns Valis Limited 95% shares and Bridge Limited owns 90% shares in Water Limited. So basically what is happening is that we have three set of separate groups. Listen to me, three set of separate groups. A group between River and Henderson, both capital gains and 75% group. A group between River and Henderson, because River Limited owns 85% shares in Henderson Limited. There is no group between River and Cares Limited, because direct ownership is 60%. Yes, there is a group between Cares Limited and Valis Limited. So River Limited and Henderson has one group, Cares and Valis has one group. And the third group is between Bridge and Water. Okay. But these three groups are not connected with each other. Because between River and Bridge, it's an individual ally. Okay. Here, River Limited do not have sufficient ownership in Cares. So River and Henderson can form a group, and here Cares and Valis can form a group. And here Bridge and Water can form a group. The point to understand is that Bridge and River Limited are not connected because the owner is an individual. River Limited and Cares have insufficient ownership. So Group 1, River and Henderson. Group 2, Cares and Vallis. Group 3, Bridge and Water. So basically these three groups can transfer between themselves only. Like River can transfer to Henderson, Cares can transfer to Vallis, Bridge can transfer to Water. But they are not connected with each other. Okay. Yes. However, the corporate tax limits will be divided for all of them. Because for corporate tax 50% group, the minimum ownership requirement is 50%. Okay. Obviously, we'll deep dive into the issues more as we move forward and we'll actually be looking at each of the requirements. So currently, don't worry, we have just started our discussion on the question. Each company prepares the accounts to 31st March each year. All of the minority shareholdings are owned by individuals, none of whom is connected with Allen or with each other. A building sold by River Limited. Okay. River Limited sold the Weir building on 31st May 2025 for £790,000. River Limited has purchased the Weir building on 1st June 19 for 300,000 plus legal fees of 10,000. Legal fees will also become part of the cost. On 5th June 2019, River Limited carried out work on the building's roof. This is also a part of cost at a cost of 35,000 in order to make the building fit for the use. So basically the cost is 300 plus 10,000 plus 35,000. On 1st July 24, River Limited spent 11,000 repainting the building. See, repaint is a repair expense that becomes directly expensed out. Repaint is a repair expense that do not becomes part of the cost of asset. 300, 10,000 and 35,000. That all is the cost of asset which will be relieved while we are disposing. This repaint is a normal revenue expense which must have been relieved in the year when we did it. River Limited used the Weir building for trading purpose apart from the period from 1st January 21 to 30th of June 2022. See, when it was purchased in June 19 and sold on 31st May 25. So if we count the number of years from June 19 to May 25, okay. So 2019 to 20, 20, 21, 22, 23, 24 and 25. Total ownership period was 6 years. 20, 21, 22, 23, 24 and 25, 6 years. Out of those 6 years, out of those 6 years, from January 21 to 30th June 2022, 18 months period, 1.5 year, it was used for non-trading purpose. It has been used for the trading purpose apart from the period from 1st January 21 to 30th June 2022, which we call as the non-trading purpose. On the non-business use portion, you won't be getting rollover relief. It is intended that chargeable gain on the sale will be rolled over to the extent this is possible. Okay. See, we are just reading the question currently. We will solve it in a lot of detail as we move forward in this question. Currently, we are just gathering up the data. Then, a replacement building purchased by River Limited. On 1st July 2024, River Limited. On 1st July 2024, River Limited purchased a newly constructed property, the Huron building. Okay, which means that they reinvested the proceed. The disposal was done in May 25, whereas purchase was done in July 24. It is permitted because we can reinvest up to 12 months before, which it is within the range, because May 25, if you go back 12 months back, it's May 24. You can go back up to 12 months before or up to 36 months later. The purchase price of 695,000 included 150,000 pounds in respect of land, 120,000 in respect of electrical, water and heating system. River Limited brought the Huron building into immediate use and uses 2/3 of it for the trading purpose. The remaining 1/3 is rented out. So again, for rollover relief, you will pick out the business use reinvestment portion. It's not difficult, believe me. It's something which is very much logical, and at advanced taxation level, it's not a difficult thing. Then second exhibit is in relation to personal tax affairs. Let's not get involved in it. Okay, let's first resolve this first exhibit which we have just covered. Because obviously group of companies and personal tax affairs, these will be two separate things. Okay, so let's look at exhibit 3. We have skipped exhibit 2 because that's personal taxation. We read exhibit 1 and now we are looking at work to be carried out. Extract of email from your manager dated 3rd December 2025. I need you to prepare some notes in preparation for an internal team meeting to discuss the various points arising from my memorandum and Allen client file. They should address the following issues. Okay. Part A1. Calculate the chargeable gain on the sale of Ware building, ignoring any potential claim for rollover relief. Very simple, 2 marks required. Very simple 2 marks requirement. Like disposal proceed of Ware building, it's 790. Less this cost 300, less this cost 10,000, less this cost 35,000. 11,000 is the repaint cost, ignore that. You will get the chargeable gain. Very simple requirement for 2 marks. Okay. I want you all to listen to me carefully. Okay. So let's open the word processor document and let's look at it. It's Allen, question name, and what we have to prepare. We have to prepare this. I need you to prepare some notes in preparation for an internal team meeting. So we are preparing notes for the meeting. Okay, we are preparing notes for the meeting. In notes for the meeting, we are answering this part A1 first of all. I need you to prepare some notes in preparation for an internal team meeting. Okay, so now to whom we are addressing. So if you go and read the introduction screen, your manager has asked you to carry out the work. Your manager has asked you to carry out the work. So this notes for the meeting, you can address it to the manager or you can address it to the client files. Both are acceptable. You can keep it to the manager or you can address it to the client files also. Both are acceptable treatment. From now, since you are addressing to the manager, so you must be a tax supervisor or a tax senior. Both are acceptable. Okay. The client is Allen Group of Companies. The name of the client is Allen because owned by your client Allen as well as some of the Allen's personal tax affairs. So currently we are talking to Allen. Date, it is written in the introduction screen that today's date is 3rd of December 2025. See, I will repeat the things again also, and the date is written here also. Date is 3rd December 2025. Subject, Allen's group of Allen's group of companies and personal tax affairs. Because we are preparing notes for the meeting on overall, I need you to prepare some notes in preparation for an internal team meeting. So in part A, you will be covering the group of companies, and in part B, you will enter his personal tax affairs also. I will repeat each and everything again. You just need to concentrate. The question name Alan. You are preparing notes for the meeting. You can keep it to the client files because you are preparing notes for the internal meeting, or you can address it to the tax manager also. Both are acceptable. Who are you? If you have been sent an email by the tax manager, so obviously you are a supervisor or a senior. Client is Alan. Date is 3rd December 25. Subject is Alan's group of companies and his personal tax affairs. Okay. Now at advanced taxation level, examiner normally don't give the introduction. He directly deep dive into the requirement. So we will also follow that approach. Okay. See, if it would be SBL exam or it would be triple exam, the examiner gives a good introduction also. But at advanced taxation, he don't do that. So you just give a basic notes for the meeting introduction and you directly start. What you have to do, you have to calculate the chargeable gain on sale of wear building. I will copy it from here, part A1, and I will paste it here. Okay. And now we'll start. Now, if you want, you can do this calculation on spreadsheet also. Or if you want, you can do this calculation on word processor document also. I normally prefer that my entire answer is solved on a single screen. So I use this table tool and I solve the entire answer on Word. But if someone is not comfortable, you can do this on spreadsheet also. In fact, on spreadsheet, it would be much easier. But spreadsheet can only be used for calculation. Commentary has to be done on the Word. Like what you will do is you will do entire calculation on the spreadsheet, and on the Word, you will write the final answer. Chargeable gain is this. Refer spreadsheet for the word. Okay. Now, so disposal proceed is, the disposal proceed is 790,000. See, I'm copying this pound sign. Copy. Now, every time what I will do is I will just press Control V to paste it. I think it wasn't copied. Good. So 790,000 is the disposal proceed less the cost. Now in the cost, the purchase price is 300,000, legal fees is 10,000, cost, purchase price 300,000, cost, legal fees 10,000, and then work carried out on roof to make it fit for the use 35,000. Cost work on roof to make building usable 35,000. Repaint cost, it is a repair expense. Okay, so it will be directly expensed out, not included in the cost of asset. So that gives you your chargeable gain 790 minus 300,000 minus 10,000 minus 35,000. So it's 445,000 pounds. A very simple requirement. A very simple requirement for 2 marks. Okay. Calculate the chargeable gain on the sale of Veer building, ignoring any potential claim for rollover. Okay. So, disposal proceeds 790,000, purchase price 300,000, legal fees 10,000, cost work on roof to make building usable, that is 35,000, because that is also a capital expenditure. All the initial expenditures. Repaint cost is a repair expense. It will be directly expensed out, not included in the chargeable gain calculation. So you get your final chargeable gain, which is 445,000. I believe examiner just gave you a starter so that you can enjoy. See, you had to prepare notes for the meeting since it's question number 1. So marks are for communication skill also. To the client file, from client, date, subject, and you did the chargeable gain. Done? Let's move forward. Explain which of the companies in River Limited and Bridge Limited group would be able to claim the rollover relief if they were able to purchase qualifying asset, including the period within which the asset need to be acquired. River Limited and Bridge Limited group. River Limited and Bridge Limited group. First of all, the disposal is made by River Limited. Listen to me carefully. The disposal is made by River Limited. So the reinvestment has to be done by a company which is part of River Limited's capital gains group. Now, company within River Limited capital gains group is only Henderson Limited. Bridge Limited cannot be part of its capital gains group because the parent is an individual. The parent is an individual. So, which of the companies would be able to claim rollover relief? If they were to able to purchase qualifying asset, including the period within which such assets need to be acquired, a 4 marks required. I want you all to listen to me carefully. Part A2. Part A2. Companies which can reinvest to get rollover relief. Done? Let's look at it. See, it's very easy if you deal with the question carefully. As I always say, every question is easy. It is all about how you approach that question. Okay? Disposal of asset is made by River Limited. And in order to get rollover relief on it, reinvestment has to be done by River Limited itself or companies within its capital gains group. Within capital gains group. Reinvestment has to be done within qualifying period, which is 12 months before disposal date and up to 36 months after disposal date. River Limited has sold Weir building on what date? Has sold Weir building on 31st May 25. Weir building on 31st May 2025. Therefore, qualifying investment period will be from 31st May 2024, 12 months before or up to 36 months later. So 26, 27 and 28 will be from 31st May 24 to 31st May 2028. Sir, please repeat the things. Let's look at it. Disposal of asset is made by River Limited, and in order to get rollover relief on it, reinvestment has to be done by River Limited itself or companies within its capital gains group. Okay. Reinvestment has to be done within qualifying period, which is 12 months before or up to 36 months later. So if disposal date is 31st May 25, 12 months before is 24 and 36 months later is 28. Okay. He asked us about the period also. So that's why we have covered the period first. Now, which companies can do it? For capital gains group, it is necessary to have ownership of at least direct shareholding of 75% and indirect shareholding of at least 50%. If you remember the capital gains group, this shareholding should be held by the company itself or by a common parent company among them. Okay. Now, River Limited cannot be in same capital gains group with Bridge Limited, as parent between them is an individual ally. For capital gains group, it is necessary that parent should be a company. So first of all, we have excluded the Bridge Limited. Okay. Bridge Limited and its subsidiary. The subsidiary of Bridge Limited is Water Limited. Bridge Limited and Water Limited and its subsidiary Water Limited are therefore excluded from capital gains group of River Limited. Okay. Similarly, this company Cares Limited cannot be part of River Limited capital gains group, as shareholding of River Limited in it is how much? Is 60%. See, you have to meet direct and indirect ownership both. Is 60%, which is less than direct ownership requirement of 75%. Cares Limited and its subsidiary, what is the name? Valis Limited and its subsidiary Valis Limited is also excluded from capital gains group of River Limited. Okay. Only Henderson Limited is part of River Limited capital gains group, as it is direct subsidiary of River Limited, and it owns how much? And it owns 85% shares in it. And it owns 85% shares in it, which is more than 75% shareholding required. Okay. This means that reinvestment for rollover relief can only be done by River Limited itself or by Henderson Limited. Sir, will you repeat it again? Yes, but believe me, it's not difficult if you remember the rules of capital gains. See, first of all, who disposed the asset? Because that company has the gain. That's the key. Disposal of asset is made by River Limited. And in order to get rollover relief on it, reinvestment has to be done by River Limited itself or company within its capital gains group. Now, reinvestment has to be done within qualifying time period. Okay, now what is the qualifying period? 12 months before or up to 36 months later. If you don't remember, just go to the summary notes, write rollover relief, and you will get this rule. 3 years, 36 months later, or 1 year before. And then if you don't remember capital gains group, just go and write capital gains group and you will get its rules. Direct ownership 75% and indirect ownership 50%. Okay. So you referred the rules of the capital gains group. Then you referred the important thing that the parent should be a company, not an individual between us. So between River and Bridge, it's an individual Allen. If it would be Allen company, so River and Bridge would be connected. So if Bridge gets excluded, obviously water also gets excluded because it is the subsidiary of Bridge. Now River and Cares are also not in the group because direct ownership is 60%. So Cares and Vallis are also gone. Only the group is with Henderson Limited. So Cares is also not part of capital gains group as shareholding is 60%, less than 75% requirement. Only Henderson is part of the group. So only River itself or Henderson can make the reinvestment. Done. Now comes the third requirement. Explain with supporting calculation the additional amount that would need to be spent on qualifying asset in order for the maximum amount of the gain on the Weir building to be relieved by rollover. See, because certain investment is already done. Some investment is already done. What additional reinvestment is required? Additional reinvestment required to defer entire gain of Weir building. Let's look at it. See, till now, I don't think that there is anything difficult in this question. Sale of Weir building, very, very straightforward. Companies which can get rollover relief, very easy. You just need to remember the requirements of rollover relief. And then comes the additional reinvestment required. Okay, so you can just read this replacement building purchase part and you will be able to understand it. Let's look at it. Okay, so now when we look at it and we analyzed also while we were reading the question, the Weir building was sold on May 25 and it was purchased in June 19, which was an ownership period of 6 years, the building which was disposed. And for this 18 months period from January 21 to 30th June 22, it was involved in non-business use. Rollover relief is only available on business use portion. So first you need to identify the business use proceed portion, that how much disposal proceed relates to business use. And then you will look at the reinvestment. Reinvestment is done of 695,000. Okay. River building brought by the River Limited brought the Huron building into immediate use and 2/3 is used in the business. So the total value of the reinvestment is 695,000. So it's 2/3 is like reinvestment of 463,334 is already done reinvestment. So how much reinvestment is remaining which we need to do further? You need to listen to me carefully. You will be able to understand it very carefully. Okay. Now, River Limited sold Weir building on 31st May 2025. It was purchased on 1st June 2019. This means total ownership period of 6 years, or you can call as 72 months. Okay, if you want to convert it into months. June 19 to May 25 is 6 years. 6 years means 72 months. June 19 to May 25. Just listen to me carefully. During this entire ownership period, it was used in its trade except for 18 months period from 1st January 2021, I think. From 1st January 21 to 30th June 2022. From 1st January 2021 to 30th June 2022. Rollover relief will be available on business use portion, which is 72 months minus 18 months. So that will give us 72 minus 18, 54 months. Total disposal proceed was, what is the disposal proceed? The total disposal proceed is 790,000. I will copy the pound sign again. Total disposal proceed was 790,000 pounds. Because every time I need it, I will just press Control V. 790,000 multiplied by 54 months divided by 72 months. Just a second. 790 into 54 divided by 72. So it's 592,500 pounds. This business use portion disposal proceed need to be reinvested to roll over maximum possible gain of weir building, which is eligible for rollover relief. Like you cannot get a rollover relief of more than that. So you need to reinvest maximum 590 to 500. See, you reinvest the disposal proceed. Obviously, the thing which will be deferred is the gain. This gain will also be prorated to business use and non-business use portion. But here the question is not that how much gain we can defer. The question is that how much additional reinvestment it is required. So River Limited sold Veer Building on 31st May 25. It was purchased on 1st June 19. Total ownership was 72 months. During this entire ownership period, it was used in its trade except for 18 months. From 1st January 21 to 30th June 22. So business use portion is 54 months. So total disposal proceed was 790 into 54 divided by 72 months. 590 to 500 is the total disposal proceed related to business use. Or I would say total disposal proceed or disposal proceed related to business use, since we are directly prorating it. Relating to business use will be 790 was your total disposal proceed into 54 divided by 72 months. So 592,500. This business use portion disposal proceed need to be reinvested to roll over maximum possible gain of Veer Building, which is eligible for roll. Now, River Limited has already reinvested how much? Has already reinvested 695,000 in replacement asset. Has already reinvested 695,000 in reinvestment of replacement asset. However, its business use portion is 695,000 into 2 divided by 3, because it was stated that it will be used in business for 2/3 portion. 1/3 will be rented out. So what will be the 2/3 portion? 695,000 into 2 divided by 3. So it's 463,333. This reinvestment was done in qualifying land and building, and within qualifying time period, as reinvestment was done within 12 months before the disposal date. Because this reinvestment was done on what date? You can go and refer it. It was done on July 24, which is within the 12 months period. Like you can go back 12 months from 31st May 25. So that will be May 24. And we have reinvested in July 24. Additional reinvestment required to get maximum possible rollover relief will be how much? 592,500 was your disposal proceed of the business use portion, and you have already reinvested 463,333. So that gives us 129 167 pounds. Sir, will you repeat it again? Yes, I will repeat it again. Let's look at it. Believe me, till this point, this question has not even a slightest difficulty level. It is such a basic thing. Whenever we sell an asset on which we want to claim rollover relief, we always analyze business and non-business use portion. So total ownership period was 72 months, business use portion was 54. So we prorated it to the business use portion. Then we looked at our reinvestment, we analyzed our reinvestment, and then we determined that how much reinvestment is already done in business use portion and what additional reinvestment is required. Part A1, simple chargeable gain. Part A2, capital gains group discussion. Part A3, what additional reinvestment is required to defer entire gain of Veer building. Now, you should ignore VAT when answering part A of this question. We have already ignored. Now, let's look at part B. Explain which supporting calculation the capital allowances that would be available in respect of the acquisition of the Huron building. Part B. Okay. What capital allowances can be available in respect of the acquisition of Huron building? Let's look at that. It's not an issue. Part B. Capital allowances that would be available in respect of the acquisition of Huron building. See, believe me, till now this question has been one of the easiest question. Like the examiner is just giving you gifts, easy marks. Maybe he will fight back in the later part of the question, but currently it's a very easy question going on. Okay, so now if you go to the aligned group of company, here the detail is provided that the purchase price is 695. It includes 150,000 in respect of the land. On land you don't get any allowance. 120,000 is in respect of electrical, water and heating system. On this you get capital allowance. Annual investment allowance, if you remember. Okay, and electrical, water and heating system are part of special rate pool. So out of 695,000, 150 is the land. Exclude that. On 120 you will get capital. And the remaining value is 425,000 that will qualify for structure building allowance, SBA. So now it's a 6 marks requirement on which we have to discuss that what allowances will be available on this purchase of Huron building. Let's look at that. So the Huron building is purchased for 695,000. It includes 150,000 pounds in respect of land. On land, you don't get capital allowance or structure building allowance. 120,000 in respect of electrical, water and heating system. This qualifies for this capital allowance. Okay. So capital allowances that would be available in respect of the Huron building. So purchase of Huron building will qualify for capital allowance on its this portion, on its 120,000 pounds portion, which I just copied it from here. 120,000 pounds in respect of electrical, water and heating system. On land, there is no allowance. 695 minus 150, no allowance. Land, 120 go for capital allowance, and on remaining, you can get structure building allowance. So purchase of Huron building will qualify for capital allowances on its 120,000 pound portion, which is in respect of electrical, water and heating system. Under capital allowance concept, it can be relieved 100% under annual investment allowance limit of 1 million pounds. Let me copy the pound sign again. Under limit of 1 million pounds. Okay. However, it is to note that single AIA limit will be available for whole tax year to entire River Limited Group. If you remember, annual investment allowance is 1 million pound and it is for entire group of companies because group of companies are related companies. Okay. See, basically River Limited and its subsidiaries, they all will get a total allowance of 1 million pounds. Okay. If you don't remember the things, you can go to the concept of capital allowance. Okay. In the capital allowances, you can find this rule that there is single AIA for related businesses. What is a related business? In case of companies, related businesses means 51% group companies. So for the entire group of companies, the AIA limit will be 1 million pounds. Okay. Now, if AIA is not available, then 120,000 pounds electrical, water and heating system belongs to special rate pool on which written down allowance percentage is 6% every year. Additionally, it will also qualify for enhanced capital allowance at rate of 50% as it is new plant and machinery purchased by a company. See, if you don't remember the rules, obviously you can use summary notes. It's a great thing you have. Okay. Enhanced capital allowance, ECA. Companies can claim enhanced capital allowance on purchase of new plant and machinery. 100% for main pool asset and 50% for special grade pool in the year of purchase. So they can have AIA, they can have written down allowance, or they can have enhanced capital allowance. How exactly it will work out? Rivers Limited will first prefer to claim AIA on purchase portion or on purchase of electrical, water and heating system as it will relieve 100% value to allowance. If AIA is not available, then enhanced capital allowance will be claimed on remaining value as it can relieve 50% to allowance column. If that is also not available, then value will go to normal SRP pool where yearly allowance percentage is 6% each year. Okay. See, capital allowances is something which students study at TX level also. You will be getting capital allowances on electrical, water and heating system portion. First, you will go for AI. That if you have annual investment allowance available 1 million pounds, but it is for the entire group. Maybe in the group someone else has used the limit. If AI is not available, you can keep written down allowance also in your mind. Okay, or you can paste it after this thing also, because after AI you think about enhanced capital allowance and then you think about written down allowance. If AIA and ECA is not available, then you will go for the special rate pool and normal written down allowance portion. Okay. On structure building portion, Rivers Limited can claim structure building allowance at rate of 3% per year. Okay. Structure building portion is how much? Structure building portion is, just a second. Basically, since we copy again and again different things, so it gets distorted. So I will again copy the pound sign. Structure building portion is total purchase price was 695, 150 is the land and 120 is electrical, water and heating system. So 695 is the total purchase price. minus 150,000 is the land, minus 120,000 was electrical, water and heating system. So 425,000. Okay. So 425,000 is your structure building allowance. We have purchased it on 1st July 2024 and our year end is 31st March. Okay. So 1st July 24 is the purchase date. In year ended 31st March 2025, SBA will be 425,000 into 3% into. You purchased on what date? We purchased on July 24. So July to December, 6 months and then 3 months till March. Into 9 over 12. 425,000 into 3% into 9 divided by 2. So it's 9563 pounds. Purchase date was 1st July 2024. Therefore, SBA will be of 9 months in year ended 31st March 2025. Okay. So why didn't you calculate the capital allowance thing also? Because I don't know exactly that how much AI is available. Because if the AI is available, 100% allowance will come. Then on the remaining value, you will go for enhanced capital allowance. But we have explained its rule in sufficient detail. So what he asked, explain with supporting calculation the capital allowances that would be available in respect of the acquisition of Elon building. Now, some student can have a question here. Let's say when the question was about capital allowance, why you commented on structural building allowance also? Because see, from capital allowance perspective only, you didn't have sufficient marks to cover 6 marks. You didn't have sufficient points. Apparently, it can cover like 4 to 5 marks. Like you identified that, okay, it is available on electrical, water and heating system. Then you identified the AIA thing. Then you identified ECA thing. Then you identified the special rate pool thing. And then you explained the sequence. Okay. In order to make your answer more justifiable for 6 marks, you also added a comment of structure building allowance. See, normally we add additional support when we think that, okay, greater marks are available. If it would be like a requirement of 3 marks or 4 marks, I wouldn't have commented on structure building allowance because it was specific to capital allowance. But since structure building allowance is normally studied with capital allowance topic and it's very much similar to the allowance thing, that's why we covered it. Okay. So 9563 is the structure building allowance which can be available on it for this year. Okay. Now, let's move forward. See, till now, this question has been very interesting. Like 2 plus 4, 6 plus 4, 10 and plus 6, 16 marks are done. Until now, I would say that there was nothing difficult in it. Now, let's move forward. Part C. Explain with supporting calculation the tax implication for Alan of the receipt of redundancy package. Now, that is something which is in Exhibit 2. From River Limited and calculate his expected income tax liability and Class 1 NIC for the tax year 25-26. So now we have to talk about the tax implications for Alan of the receipt of redundancy package, and now it's a 13 marks requirement. Now I can feel that it would be something which would require some effort. And then there are still 2 more parts remaining. The examiner has split it into a lot of requirements, but obviously that's a good thing for us because he's making small requirements. Okay. The tax implications for Alan of the receipt of redundancy package from River Limited. Let's deep dive into it. For this, we need to look at exhibit number 2. Okay. Let's look at it. I believe that till here, you guys are understanding it and you are able to understand what I'm discussing. I try my best to repeat the things and cover it in as much detail as it can be. Now, income. Alan has been employed full-time by River Limited for many years, receiving a salary of £180,000 per annum. Okay. He was made redundant by River Limited on 30th of June 2025. On that date, he received £15,000 statutory redundancy pay. See, statutory amount is wholly exempt. And then additional ex gratia which the employer is giving you on his own choice. Ex gratia is partially exempt up to £30,000. But this limit gets reduced by the amount of wholly exempt value which you receive. Like £30,000 exemption limit will be reduced by this £15,000 wholly exempt amount. If you don't remember these rules, just go to summary notes, write termination payment, and you will get everything. Wholly exempt, statutory payments, wholly chargeable, partially exempt, limit is 30,000, it is reduced by statutory amount. Okay. Now, he also received a payment equal to 6 months salary on 30th June 25. The employer also gave him a 6 month salary. His employment contract specified only a 2 months notice period in which he was not required to work. See, 2 months was the notice period payment, which is the contractual. Additional 4 months which he received is something which employer gave over and above. See, he received 6 months salary at the time of termination. Why? When his notice period was only 2 months. So 4 months was a gift, which will also be included in this ex gratia category, or we call as partially exempt category. His only other regular income is £45,000 of dividends from his investment each year. He will not receive any other source of income in the tax year 25-26. See, currently our requirement is on 25-26. Other requirement is for 26-27. Currently our requirement is on 25-26. Explain with supporting calculation the tax implication for Alan of the receipt of the redundancy package from River Limited. And then calculate his expected income tax liability and class 1 NIC. Okay. So let's first talk on his tax implication for the receipt of redundancy package and income tax liability and his income tax liability and class 1 employee NIC for tax year 2025-26. Currently we are talking about tax year 2025-26. Okay. Just a second. Sometimes this happens. Now, so in the tax year 2025-26, he received this redundancy package. Let's cover this redundancy package first, and then we have to calculate his income tax liability also. Okay, because the requirement first say us to explain the tax implication of the receipt of redundancy package. Now, first redundancy package of Alan. Now, Alan received £15,000. Let me copy the pound sign. Control C to copy, and then every time I will paste it. £15,000 as a statutory redundancy payment. Redundancy payment from River Limited. It's River Limited if I'm not wrong. Yeah. He got £15,000 as statutory redundancy payment from River Limited. It will be a wholly exempt payment, and there will be no income tax and NIC implications on it. Okay. Ex gratia payment received of how much? Ex gratia payment received is £38,000. Ex gratia payment received of £38,000 will be included in head of partially exempt category. Okay, it will be exempt up to £30,000 and excess will be chargeable. will be chargeable. However, exemption limit of £30,000 will be reduced by amount of wholly exempt payment received by Alan in terms of statutory redundancy payment. His exemption limit will be 30,000 minus 15,000. That's statutory redundancy payment. So his exemption limit will be £15,000. Amount chargeable from ex gratia payment will be 38,000 minus 15,000. So that will be £23,000. On this, Alan will have to pay income tax. Okay. From NIC perspective, Class 1A employer NIC will arise. If you don't remember, let me guide you. Ex gratia payments. Ex gratia payment. If they get chargeable, they only get chargeable to Class 1A employer NIC. See, wholly chargeable payments are taxed in a normal way. Ex gratia payments, if they get chargeable, they only get subject to Class 1A employer NIC. Okay. Now, here some students will ask that, sir, Class 1A employer NIC is for non-cash benefit. Why are you putting it here? See, it is a rule by tax department. So don't waste time in arguing them. They have said that if partially exempt amount will get chargeable, it will be subject to Class 1A employer NIC only. Okay. Cash or non-cash, whatever it is. Partially exempt, if it gets chargeable, it will be only subject to Class 1A employer NIC. Okay. So, first of all, what he got? He got £15,000 as a statutory payment, wholly exempt. He got £38,000 as ex gratia payment. Okay. Let's move forward. Now, he has received one more payment. He also received a payment equal to 6 months salary on 30th June 25. His employment contract specified only a 2 months notice. Okay. So now, additional payment received of 6 months salary need to be divided in contractual notice period payment and excess payment. Contractual notice period payment is of 2 months salary, which will be how much? His salary was £180,000 per year. 2 months is the notice period payment from this 6 months. He also received a payment equal to 6 months salary. Employer gave him 15,000 statutory, 38 as a gift, and then also gave him 6 months salary. So from now, this 6 months salary, 2 months is the notice period payment. So £180,000 is your annual salary divided by 12 into 2. 180 divided by 12 into 2. So that is £30,000. Notice period portion is a contractual payment and it will be subject to income tax and Class 1 employee NIC for Alan. Excess additional payment received equal to 4 months salary, because 6 months was total, you got 2 months went to notice, so remaining is 4 months salary. 4 months salary will be categorized or will be included in partially exempt category. Its amount will be £180,000 divided by 12 months into 4 months salary, because 180 was your annual salary. So £60,000 as partially exempt limit exemption is already used against ex gratia payment. Therefore, this £60,000 will be subject to income tax on Allen and Class 1A employer NIC for River Limited. Sir, can you repeat it again? See, first of all, you got 15,000 as statutory redundancy payment, wholly exempt. Okay. See, redundancy payment is termination payment is a very simple topic which you have covered. Okay. Then ex gratia payment was 38,000. It's partially exempt. Exemption limit is 30,000, but it gets reduced by amount of wholly exempt which you have received. 15,000 was wholly exempt which you received. So remaining exemption was 15. 38 minus 15, 23,000 is chargeable, on which Allen will pay income tax. On partially exempt portion, keep it in your mind. On partially exempt portion, income tax is payable from NIC perspective only class 1A NIC. Whether it's cash or non-cash, no issue. It's the rule. It's the rule. So please don't message me that, sir, why class 1A NIC on cash portion of ex gratia? Tax department said. Sir Owais has not said it. Tax department said it. That if partially exempt portion becomes chargeable, NIC payable on it will be class 1A NIC, not class 1 employer, class 1 employer. Additional payment of 6 months salary need to be divided in contractual notice period and excess payment. Because the 6 months amount which you got, 2 months is related to his notice. So, contractual notice period is of 2 months salary, which will be 180, which is his annual salary divided by 12 into 2. It will be subject to normal income tax and NIC because it's your contractual, it's just like your salary. Excess contractual payment received equal to 4 months salary, because total receive was 6 months minus 2 months for notice. So remaining is 4 months. Will be included in partially exempt category, because anything which is statutory is exempt, anything which is contractual is chargeable, and anything other than that is partially exempt. Employer giving on his own choice. So it's 60,000 as partially exempt limit is already used. So ex gratia in the ex gratia payment. Therefore, this 60,000 will be subject to income tax on Allen and class 1A NIC for River Limit. So now we have explained the tax implication of the redundancy package. Now comes income tax liability and class 1 employee NIC for 25-26. Income tax liability for tax year 2025-26. If you want, you can do this calculation on spreadsheet, the calculation. Okay. So now we are talking about income tax of Allen for 2025-26. Now if you look at it, in 25-26, Allen was in his employment till 30th of June 2025. See, it's very important. Now 25-26, the tax year started in April, May and June. 3 months he was on the job and then he became redundant. Once he became redundant, he got all of this in the redundancy package, for which we have already stated the treatment. And along with that, he's also receiving a dividend income. Let's start with it. I want you all to listen to me carefully. It's not difficult. We have to do is income tax liability. Okay. Now, if you want, you can do this calculation in spreadsheet also. I normally prefer that my question is solved in single screen of word processor. That's why I'm doing it here. But if someone wants to do it in spreadsheet, that's completely acceptable. Okay. Salary till 30th June 2025. Okay. £180,000 was his yearly salary divided by 12 into 3. See, basically, he was on his employment till 30th June because he was made redundant on 30th June. Always remember, tax year starts on April 25, May 25 and June 25. So his 3 months salary will be divided by 12 into 3. That is £45,000. So that will go in his non-saving income. Then comes his termination pay package. Chargeable portion of ex gratia payment. So the chargeable portion of ex gratia payment, we ourselves calculated it. From 38,000, 15,000 was exempted. Chargeable portion of ex gratia payment was 23,000. Okay. Then comes his notice period payment. Notice period payment was his 2 months salary. That was 30,000 pounds. Here it goes. Then comes excess payment, okay, which was above his notice period payment, and that excess was 60,000 pounds. Okay, since the partial exemption limit was already used, that's why this excess payment is also getting taxable. See, he is getting salary of 3 months, April, May, and June. Chargeable portion of ex gratia we are self calculated 23. Statutory redundancy was completely exempt. Contractual payment, notice period payment of 2 months. That's 30,000. We are self calculated it. And excess additional payment, that was 60,000 pounds, which also became chargeable because the exemption limit of partially exempt was already used. In addition to this, he is getting dividend income. So that dividend income is given in the question, and that dividend income value is 45,000 pounds of yearly dividend. 45,000 pounds of yearly dividend. So dividend income goes in the head of dividend income. So that gives us his total income 45, 23, 30 and 60. So the total of non-saving income is 158,000 and here the total is 45,000. See, it's very simple. You just need to listen to me carefully. Then comes your personal allowance. It will be diminished to 0 as income exceeds 125, 140. I hope you all know. There is no qualifying donation or personal pension contribution in the question. There is no qualifying donation or personal pension contribution in the question. So your total income will diminish your personal allowance. Okay. So your income of non-saving is 125 and of dividend head is 45. Okay. So that's your income of 203,000. So your personal allowance will diminish to 0. Why it will diminish to 0? The reason is that income is more than 125, 140. I hope you all know that after 100,000, excess of 2 pounds diminish your personal allowance by 1 pound. So your personal allowance is 12570. So multiplied by 2. 25140 of excess will diminish the personal allowance to 0. Now this is something very basic and at advanced taxation level students normally know this. Okay. So the taxable income here will be 158 and here it will be 45,000. Let's apply income tax on it. Now, non-saving income. On 37,700 pounds, you will apply 20%. So that gives us 7,540 pounds. Then comes the higher rate band. 125, 140 minus 37,700. I believe that you all know the tax bands. If you don't know them, then it's really alarming because exam is very near. So that is 87,440. You apply 40% on it into 40%. So that's 34,976 pounds. Okay. Then the excess 158,000 minus 125, 140. You will apply 45%. So that is 14,787. And this excess was, if I write that also, 158,000 minus 125, 140. So it's 32,860 pounds. So that was 14,787 pounds. Then comes your dividend income. On dividend income, first 500 is always taxed at 0%. So that gives us 0. And the remaining 45,000 minus 500 pounds. So that gives us 44,500 pounds. And then you will apply the tax rate of dividend income. If someone do not remember the tax rates, you can always refer the tax tables. Okay, you can always refer the tax tables, the tax rates of non-saving, dividend, everything will be given in the examination. Okay, but while using the practice platform, make sure that the rate sheet is of your current tax year. So June 25 to March 26, yes, it's valid. So the dividends additional rate tax paid 39.35%. So 44,500 into 39.35%. So that is 17,511. So that gives me his income tax liability for 2025-26. 7540 34976 14787 17511. So it's 74,814 pounds. Sir, will you repeat the things again? Yes, I will repeat the things again, but you need to listen to me carefully first. Let me make it a bit presentable because I don't like dirty workings. It's not necessary for you to do it in the examination. Even if you don't have time, it's not necessary to use the pound sign also always. Okay. If you use it, it's better. If you don't use it, it's still acceptable. Let me repeat it again. See, we have to calculate his income tax. It's very basic. Now, in 25-26, his employment continued till June 2025. Because then he was made redundant. 180,000 was his annual salary. Divided by 12, multiplied by 3. You got salary of 3 months. Chargeable portion of ex gratia payment, you yourself calculated it. 23. Notice period payment 30. Excess additional payment. Out of 6 months, 2 months were notice period. So remaining 4 months was excess additional payment. And then he had dividend. You totaled his non-saving and dividend. Income was exceeding 125, 140, so personal allowance diminished to 0. I hope you all remember the rules of personal allowance. If you don't remember, you can just go and refer it. Your personal allowance is 12570. If your adjusted net income exceeds 125, 140, so exceeds 100,000, your personal allowance diminished by 1 pound for every 2 pounds of excess. So if your allowance is 12570 into 2, you have excess of 25, 140. Your allowance will fall to 0. So at income level of 125, 140, obviously allowance has declined to 0. Okay. If adjusted net income is 125, 140 or greater, personal allowance diminished to 0. There is no charitable donation or pension contribution in the question, so we just look at the income values. And then indeed it is income tax. Now, along with it, what he has asked us, explain with supporting calculation tax implication for Alan of the receipt of redundancy package and calculate his expected income tax and class 1 NIC. So class 1 NIC for Alan for tax year 2025-26. So Alan will have to pay class 1 employee NIC on his salary for 3 months plus on contractual portion of notice period payment. I will repeat it again. He has to pay class 1 employee NIC on his salary of 3 months. This salary ex gratia payment is always subject to class 1 NIC. Any form of ex gratia, any form of payment which is being given by the employer on his own choice. Okay. So only notice period payment and salary will be subject to class 1 employee NIC. We have already stated its reasons here, that on what which thing will be applied. Okay. So total amount subject to class 1 employee NIC will be 30,000 of this, 45,000 of the salary and 30,000 of notice period payment. 45,000 of the salary and 30,000 of notice period payment, which brings total to 75,000 pounds. Now, class 1 employee NIC. Again, if you want, you can use the spreadsheet also. The text tables, if you want to check the NIC rates. On starting 12570, it's 0%. Then till 50270, it's 8%. And then the rate is 2%. So 12570, it goes at 0%. That gives us £0. Then 50270 minus 12570. So that is 37,700. 8%. So that gives us 3016 pounds, and the remaining 75,000 minus 50270, the excess value. So that is 24,730. 2%. It is 495. So total class 1 employee NIC payable by Alan, 3016 and 495. So it's 3511 pounds. Okay. So I don't think that it is difficult, because in my opinion, it is about doing some basic level work. Okay. Obviously, in the examination, you have to be fast and smart in order to deal with it. But it is not something which I would say as a difficult thing, because talking on redundancy package, doing income tax liability, class 1 employee NIC, I say that it is one of the easy things which you can get at advanced taxation level. So till now, if I look at this question, basic chargeable gain, capital gains group implication, business use and non-business use for rollover, capital allowance and structure building allowance, redundancy package commentary on the redundancy package, doing income tax liability and class 1 employee NIC. This question is a blessing till now. Now let's move forward, part D. Now it's almost done, like 2 small parts remaining. Advice on the conditions and the tax implications of the holiday cottage qualifying as furnished holiday letting in 2026-27. So we have to talk about conditions and implications of the holiday cottage qualifying as furnished holiday letting. Okay, no issue. I hope you all remember the conditions of furnished holiday letting, and if you don't remember, so the good luck is that the exam has not yet started. You can go to the summary notes, you can press furnished holiday letting, you can get the rules. FHL, furnished holiday letting. Available for letting for 210 days, actually let for 105 days. Long letting period is not permitted. Okay, what are the impact it will have? This is what he has asked, the conditions and the tax implications. Just pick it up from the summary notes and go and paste it there. Much simple. That much simple. Okay, so let's look at it. Let's read this portion first of all. We haven't read it. So Alan intends to start a business, letting out a holiday cottage on the coast in the UK. Alan would like to rent the cottage out to artists who may want to spend several weeks there at a time in order to create paintings of the local scenery. Alan does intend to also stay in the cottage for a few months of the year. So Alan will also stay for some part. Annual income from the cottage is expected to be around £20,000 per annum and would commence 6th April 26. Alan's estimated cost would be repairs 2000, council tax 1200, agent fees 800, mortgage interest 1600. Alan is planning to spend £5,000 on furniture for the cottage at the start of tax year 26-27. So first of all, the conditions. So the condition for furnished holiday letting is that it should be available for letting for at least 210 days. So currently, the artist will come and who will spend several weeks in order to create paintings. Alan will also be staying. So Alan has to ensure that this all work should be done in such a way that in a year, at least 210 days should be available for letting. And from those 210 days, actual letting period should be at least 105 days. So in a year, there are 365 days. So whatever repair and construction work and whatever period Alan is also staying, 365 days minus 210 days, it should be available for letting. So Alan cannot stay in the property for more than 155 days. Alan cannot stay in the property for more than 150 because 365 days are in the year. It has to be available for letting for at least 210 days. So let's first talk about conditions. Conditions which need to be satisfied for letting of holiday cottage as furnished holiday letting include following. Number one, holiday cottage should be available for letting for at least 210 days in a year. Alan has to ensure that whatever construction work he intend to do and whatever period he himself want to stay inside the property should be such that available for letting period should be at least 210 days. In a year, there are 365 days in total, and available for letting required is 210 days. This means that Alan cannot spend more than 155 days inside the property because that period won't be available for letting. Okay, because in that case, because he has to satisfy properties available for letting period of at least 210 days. See, there are total 365 days in a year. 210 days, it should be at least available for letting. So whatever you want to do, you want to stay, construction or whatever it is. So out of 365, if I remove 210, remaining number is 155 days. Holiday cottage should be actually let for at least 105 days in a year. And long period of letting to a single tenant, which means letting of 31 days or more should not exceed 155 days in total in a year. Like it cannot be a normal rental property which you give and forget. Okay, it cannot be like that. Okay, long period of letting means giving it to a single tenant for at least 31 days. So if you let it for 31 days, it is counted as long period of letting. So, okay, if I did it with 5 people, so my total will become 155. Or maybe I gave 50 days to a single tenant and then 31 to 3 more. So maybe that also brings my total to 155 days. So it shouldn't be a situation of long period of letting. It shouldn't be a situation of long period of letting. So these are the conditions which need to be satisfied. I hope you all have studied it. Now, what are the tax implications it can create? Now, he has asked that what are the tax implications? So the tax implications can be that capital allowance will be available on plant and machinery. UK relevant earning will be considered for pension contribution. There will be no restriction of interest expense allowed expense. Okay, like he can claim the interest expense as a normal allowed expense. On the disposal, it will qualify for CGT business reliefs, like business asset disposal relief. In IHT, it will be considered as business property relief. If there will be a loss, it can be set off against other incomes of FHL property only. So these are the implications. Okay, so implications of getting it classified, as furnished holiday lighting will be, what will be the implications? So the first implication will be income from FHL will be considered as UK relevant earning for pension contribution purpose, and Alan can use it to make contributions to pension plan and get relief. You know that there are three incomes which qualify for pension contribution. Number one is FHL, number two is employment income, and third one is the trading income. Secondly, allowed expense will be claimed, will be available on purchase of furniture which he did, because you know that it will be considered as a normal trade now. So since it's a small business, so you will be able to claim allowed expense on the furniture and expenses you are doing on the purchase of furniture for business use of £5,000. Purchase of furniture of £5,000. Let me copy the pound sign again. Of £5,000. No restriction on allowed expense of interest. Okay. If there will be any loss on FHL activity, it can only be offset against future income of FHL only. Like it's not part of normal property income. Okay. Then business reliefs will be available of capital gain tax and inheritance tax on it, which include business asset disposal relief, gift relief, and business property relief in IHT. Okay, so obviously it's beneficial to get it qualified as furnished holiday lighting. So again, I would say that it was a straightforward requirement. If you remember these conditions of FHL, like 3 conditions and 3 implications, you can easily cover 6 marks in it. I hope that you guys are understanding it. Now, part E, last part. Alan informed us at a recent meeting that he had received a refund of income tax from HMRC. He had been expecting a refund of £8,000 but actually received a refund of £20,000. Alan stated that he does not intend to disclose this error to HMRC, believing it to be their mistake and that HMRC should approach him if they want it back. Please send me an email as a separate document that explains the actions that we as advisors should take in regards to this matter. It's a simple requirement of ethics. If you remember my ethics handout, I will open it on the screen also in just a while. So you can easily cover it like, okay, if we have received any refund by mistake, we have to convince Alan that he should report it to HMRC. We should also investigate the reason. Maybe HMRC is said it correct. Like he had £20,000 entitlement. Maybe he was thinking at 8,000. So we will sit with Alan, look his documents and try to investigate the reason of excess refund. Like why excess refund is received. We'll try and find the reason. If the reason is found, it can be kept. If the reason is not found, it need to be returned. We'll convince Alan that it is his obligation to return it. If he will not return HMRC money, it may lead to interest and penalties on it. And additionally, keeping any amount of money for which you don't know the reason It's a matter of money laundering. Like, how will you show this inflow in your tax return that why you receive this money? You don't know the source, you don't know the reason. So it can lead to money laundering implications also. And if Alan will not agree for it, then we will resign from his engagement. We cannot continue with such a client, and we'll notify HMRC that we don't serve Alan anymore. However, we are not required to tell the reason to HMRC that why we have resigned. We'll just tell them that, okay, we don't serve Alan anymore, because if later on HMRC will catch Alan, they will also impose fine on us. That what were you doing when your client was involved in any such wrong act? So first of all, it is a separate email which we have to prepare. Okay, let's look at it. First, let's close the notes to the meeting. So we close it by writing thank you. Now comes part E, email to manager, because we have to prepare it as a separate email to manager. To tax manager from tax supervisor or senior, date December 2025. This date was written here, 3rd December 2025. You can write here, 3rd December 2025. Subject, ethical issues to be considered in relation to Alan's tax engagement. Okay, you can write an introduction since you are writing an email. If you write it, it's acceptable. If you don't write it, then also it's acceptable. This email response is in relation to evaluation or consideration of. If you write introduction, it's okay. If you don't write it, then also it's okay. There is nothing to worry. In relation to actions that we as advisors should take in regard to the matter. Okay, that explain the actions that we as advisors. This email response is in relation to evaluation of excess tax refund Alan has received and actions our firm should consider in relation to it. Okay, so ethical issues to be considered, or you can say actions our firm should consider. I will repeat the things again also. Okay, you're writing an email to manager, to tax manager from tax supervisor, date, subject. This email response is in relation to evaluation of excess tax refund Alan has received and actions our firm should consider in relation to it. If you write introduction, that's acceptable. If you don't write, then also it's acceptable. Let me show you my ethics document so that if someone has missed it, he can go and refer that also. So this is the ethics handout, which is part of our LMS also, and we had a complete class on this also. So in this, basically, I have discussed the routine requirements and some concepts in relation to ethics, because 5 marks in relation to ethics are a mandatory component of our examination. Okay, like using knowledge obtained from one client to another client, unknown refund issue. See, this entire issue is already discussed. We will investigate the reason of unexpected refund which they have got. If it is received in error, we need to notify HMRC. If the client does not return, then we have to notify him about civil and criminal liabilities, interest and penalty issues, money laundering implications. We may resign from the engagement. We may notify tax department. Okay, so all of these issues we have already covered it in our course. So, what ethical issues need to be considered? Our firm will assist Alan in investigating the reason of excess refund received from tax department. If the reason of excess refund gets known and it is legitimate, then Alan can keep the amount of refund. Okay. However, if the reason of refund do not get known, or reason is not legitimate, like it's proved that no, the refund received is excess, then excess refund amount because he's saying that my entitlement was 8,000, but he has got 20,000 pounds. Then excess refund amount need to be returned to HMRC. Our firm should convince Alan to refund excess refund amount and make him aware of possible civil and criminal implications which may arise of keeping HMRC amounts. Okay, HMRC may impose interest and penalty if they discover later on that Alan has kept the refund amount, the excess refund amount, I would say, without a legitimate reason. Okay, now, additionally, it is also a matter of money laundering to keep excess refund amount, as Alan has no reason of its source. Keeping this money in company or with him will require manipulation of its source of fund, because obviously you don't know that from where it has come. So what you will record? A commission income, other income, what is it? How will you put this excess amount into your balance sheet? Okay, if Alan will not agree to refund or to return excess refund amount, then our firm should resign from his engagement, as remaining affiliated with such a client may create fines or issues for our firm also. Like HMRC can impose fines on us also. Our firm should notify HMRC about its resignation. If our firm resigns from the engagement, however, notifying the reason of resignation is not required. See, it's not a public interest matter that a lot of people will die. Okay, thank you. The end of the email. It's not a public interest matter that you will breach confidentiality, because you can't breach the confidentiality. Okay, and it's not some public interest matter that you breach the ethical code. But this is one of the requirement which is very much routine, like 5 marks ethics requirement. And question is done. Like, I believe it was a very easy question. Like, there are easy questions and then there are very easy questions. It's like that. Chargeable gain calculation, capital gains group, which companies will get rollover, business and non-business use thing, capital allowance implication, termination package, very simple, doing tax liability and NIC, furnished holiday letting and the ethical issue. One of the easy questions, like a criteria of easiness is also like that, that normally it takes me 120 minutes to complete question number 1 while we are discussing in the class. But it has been completed in 1 hour and 43 minutes, which is the exact time you will be available in the exam also. Like, along with discussion and a lot of excess talking, I have completed it in 1 hour 43 minutes. Very easy question. Okay, so I hope that you guys have understood it, and if you have any query, you can always connect with me directly on my WhatsApp number. We'll also be discussing question 2 and 3 in the next classes. Okay, so thank you and best of luck for your exams.